It's important that you understand that there's a couple of ways to look at this test period. And there's a way to compress this 12-month test period to where you don't have to be outside the state for 12 months, and that is if you're a bona fide resident of another state. Now, before you run to create an LLC in Delaware, Oregon, or Montana, or any other state, you need to be aware of the fact that California does not use an income tax definition. And why I'm saying that to you is this. If you're legitimately a resident of Ohio and you bought a vehicle or a vessel or an aircraft in Florida and you put it in a Delaware corporation, so you're comfortable to go to your CPA in Ohio, and you ask him, am I a California resident? He's going to tell you no. That's because in his frame of reference, because CPAs are trained in income tax, okay, you're not a resident of California using an income tax definition. What you don't know is that California doesn't use an income tax definition. Now, I'm going to give you a list of items that California uses, and I don't remember them off the top of my head, so I'm going to have to read them as I go take you through them. But before we get started, I want you to switch hats a little bit, change your viewpoint. Because if I just read you this list of things, you're going to be saying, nope, nope, nope. You're going to be defending yourself against the audit. And that's not the proper way to understand how dangerous this is for you. I want you to adopt the viewpoint that you're a brand new employee of the state of California. You want to get promoted. You want to be a hero by creating extra tax revenue. So as I give you each of these little bullet points, and we'll talk about them as little a, little b, little c, that's out of the DMV code, okay, think of how you could use them as a weapon to be a hero, okay? The burden of proof is always on you as the taxpayer. So it's not up to you, them being the state of California, to prove anything. Every transaction is considered by law taxable in California. It is the burden of your burden as the taxpayer to prove that you don't owe it. So the definition of resident in the California law is any person who manifests intent to live or be located in this state on more than a temporary or transient basis. The following are evidence of residency for the purposes of vehicle registration. Little a, address where you're registered to vote. Pretty simple, pretty straightforward. Little b, location of employment or place of business. So let's say you're the same Ohio resident, your company sends you out to the San Francisco area to do an audit of a huge company's books, and you're here for 6 to 8 weeks. What's your location of employment? You see what I mean? If you, the auditor, are trying to be a hero, you're going to take you, the taxpayer's documents, and use that to prove that you're a resident. So beware. C, payment of resident tuition at a public institution of higher education. You would think that you know that if you're the same resident of Ohio, that your daughter who wants to go to school at Cal Berkeley is going to pay non-resident, okay? But I've recently found out, as I have a daughter who was applying to colleges all over the country, that kids can trade their residencies with other kids from other states and wind up paying resident tuition. So you better check into this. If you're paying resident tuition to send your daughter to Stanford or to Cal or to Long Beach State, you're a resident of California for the purpose of use tax, okay? Little d, attendance of dependents at a primary or secondary school. So you're the same resident of Ohio, you're married, you have a couple of kids, you get a divorce, your wife moves to California, and your kids are still in grammar school. For the purposes of use tax, you're a resident of California. Think about this and maintain the viewpoint of how you, as the tax auditor, would attack the taxpayer. Otherwise, you're going to go through all of this and you're going to blow it all off, and you're never going to sense the danger that it resides for you. E, filing a homeowner's property tax exemption. I recently, within the last couple of years, discovered that there's quite a few people who live in the state of Washington who own homes in Southern California to get away from that, what I consider to be dreary, rainy season, which tends to be 11 months of the year, and they have homes in the Palm Springs area or the desert area. If their local CPA has told them to file a homeowner's property tax exemption to save them money on property taxes, they're a resident of California. Little f, renting or leasing a home for use as residence. So you're the same guy from Ohio who has a jet, he brings his family to Southern California, spends a couple of weeks in the Disneyland hotel, manages to take his kids to SeaWorld, go down to see the San Diego Zoo. No, I've not been hired by the Southern California people to bring you there. Okay, but isn't that a residence? Remember, wear your hat as the guy who's trying to use this as weapons, as what I would call bullets. Little g is a declaration of residency to obtain a license or any other privilege or benefit not ordinarily extended to a non-resident. I'm not quite sure. I've never come across anything yet where that has been a problem. But remember, this guy is trying to make it taxable. Okay? Little h is possession of a California driver's license. I think that's pretty straightforward. But just because you have an Ohio license and you have a California license, and you're only going to show them the Ohio license, that's not going to work for you. Here's the one that will catch you. Slow down and listen. I'm going to read it to you verbatim. Other acts, occurrences, or events that indicate presence in the state is more than temporary or resident. When I'm doing my live seminars, this is the point at which I pause and I let people sink in and I ask the question, how could you use that? And always there's a pregnant pause, 60 to 90 seconds, and somebody weakly raises their hands and says, any way you want. They're 1,000% correct. Think about how, if you were trying to use that to attack an evil taxpayer, because they can afford an airplane or a nice vessel, okay, how you could use that to make that taxable. That's part of the problems that you run into. I tell all of my prospective clients, it doesn't matter if you're a resident of Ohio, you take possession of your aircraft or vessel in Florida and register it in a Delaware corporation. Any of those circumstances, you can be subject to an assessment of tax by California if they find you inside the state of California anytime within the first 12 months after you purchased it. So be aware of that. Be absolutely aware of it. If the aircraft, vehicle, or vessel enters California anytime within the first 12 months, it's presumed taxable by California law, okay? And it's up to you as the taxpayer to support with documentation that you don't owe it. And the only kind of organization that can get you through this kind of struggle with the state of California is my company. We've handled a little over 1,400 of these cases. We've never failed one, provided they hired us before. We will take on your case if it's you did it 2 years ago and then you get assessed by the state of California. And a lot of times we can still help you, as long as you haven't done something that's fatal. Okay? If the board contacts you, if the state of California contacts you about this particular purchase because they've discovered your property is in California, don't contact them. Pause. Think about that. Call me, 916-691-9192. My personal extension is 108. The call is free. I will go over all the facts and details that pertain to what you want to know, and I'll tell you what to do. The call is free. The only time I will charge you money is if I discover that there's a way that I can help you, and then you get to decide if you want to hire me.